Negative gearing abolishment, and what does it actually mean to you? I just tried my best voice then. I'm sorry to make it sound like a doom and gloom, but welcome to What School Should Have Taught You, a podcast where I share with you all the lessons you need to know about building true wealth. I'm Iannuzzelli, and today I want to talk to you about the impacts of negative gearing abolishment and what does it actually mean to you if the government were to do it.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
It was something they tried back in the late 80s, 1987 to roughly about 1989. It was an era where it was a booming 80s and then it was preceded by a very long recession, the 90s recession, or the recession that we had to have. And it was brought apart about trying to reduce the amount of taxes that was walking out the door and keeping the coffers full with the government. There was lots of things that they needed to do. The economy was roaring hot. We had huge interest rate increases during that time. Anywhere between about 17 to 20%. I'm sure your parents would have told you about those days where, we were paying interest of 17 to 20% on our loan of $55,000. A lot different today where the average loan size is anywhere between $600,000 to $700,000 in the property market that we're in, where the median house price here in Sydney especially sits well over $1 million, and majority of states around the country well over $800,000, with the exception of struggling Victoria at the moment. But in saying that, we're hearing a lot of talk at the moment, especially in the media, around negative gearing abolishment. We need to start thinking a little bit more proactive. You've got the Greens in their corner. They've been fighting for cheaper house prices for everybody, essentially trying to tear down the capitalist society of working your backside off and trying to achieve something with all the hard work and the money that you save and trying to build for your financial freedom. But the conversation at the moment, especially in all media around Australia, is the Albanese government, the Labor government, talking about potentially negative gearing being abolished. It has happened once before, so it's one of those things where it's not off the cards, but what does it actually mean to you as a property investor or a person wanting to get into property? Let's look back in the 80s when it actually was taken away and what happened to the property market during that particular amount of time. Well, the first thing that happens if they were to abolish negative gearing is that initial fear and mindset sets in. Property market's going to collapse, people can't afford to hold the properties long term, and all of a sudden we're going to have this short-term market drop. That's what initially happens when a lot of doom and gloom comes in. Media feeds the fear, gets a lot of clicks. Don't forget to like and share this video. But if you're feeding into all that doom and gloom, what you'll start to see is that initial panic phase. Yes, the property market will react to it, and you probably will see the property market initially fall or stall. There might be people looking to get out. There might be a lot of supply that comes onto the market because without negative gearing being there in the economy, without investors being incentivized to hold property longer term, we're going to see a big drop in the rental market. 6 to 9 months later on, you'll start to see that fear starts to walk away. Rents will potentially start to increase, and thus you start to get a bit of a super economy inside the property market. It happened in the late 80s. Property prices really started to increase, and hence inflation started to grow. Wages had to catch up, and there was no incentives for investors to buy property and potentially have the negative gearing benefits that come with owning properties that potentially might be losing money. Landlords are incentivized essentially at that stage to lift rents to cover their costs. No one's going to be buying property where it's going to cost you $10,000, $15,000, $20,000 and you don't have any tax benefit associated with that particular loss you might be making. Other economies might fall off it. Quantity surveyors will definitely feel a hit if they're predominantly utilizing depreciation schedules as a means to generate income. The property market, the property economy in Australia holds so much gravity and contributes to so much of our internal GDP, our gross domestic product, essentially making a country wealthier. And again, we have the opportunity of outsourcing a lot of the properties that we do build to overseas and foreign investors. Not necessarily do they get the negative gearing benefits that we as Australians obtain, especially from the income that we earn. But nevertheless, you're not going to have incentives for builders to go out there and build brand new properties, or developers to build brand new properties where there could be some depreciation benefits that come from it. We're going to see less rentals on the market. And again, in turn, rental incomes will increase. Coming back to that late 80s period, a lot of people were forced to capitalise the negative gearing that they were incurring on their properties during that period of time. And then post 89, when they were allowed to claim back all that negative gearing in essentially 1 year, there was a huge amount of outflow out of the government coffers during that period of time. Essentially, people were getting tens of thousands of dollars as a tax refund. And in the late 80s, when properties were predominantly around the $50,000 to $60,000 a mark in most affordable areas, that meant a lot of people had the capital to go out and buy property, and they were storing that particular amount of cash, and it got them through that 90s recession. So when you see and hear about all this abolishment of negative gearing coming into the market, it's been talked about so many different times. I know Bill Shorten, during his time as the shadow minister at that stage, when he was up against, I believe, Scott Morrison at that stage, was talking about negative gearing. He got absolutely axed in the polls. So is it something that might happen in the economy? Well, it's definitely been on the cards for a long time. We all know Australia's property market has been running rampant, well more than inflation for the last 15 to 20 years, or since the GFC. So it's definitely something that might be on the cards, although personally I feel that it'd be the wrong decision to abolish negative gearing, again, to take away all those incentives that property investors receive, especially during times where interest rates are a lot higher, and especially where times where we want to see rents come down. Negative gearing is a big contributor to that, because if more properties are in the market, more rentals are available, and essentially what comes from that is rental prices will start to come down as a result, because people are able to get a little bit of benefit while providing affordable living for many Australians. So while we talk about abolishment of negative gearing on the forefront and at the tip of everybody's tongue at the moment, I know with a lot of my clients, I'm getting a lot of questions about, Jeremy, do I think this will happen? And what does it look like if it does? It's one of those things we can't control. Although, and saying before, I do believe there would be a dip in the property market. Again, just that fear-mongering that comes into the mindset of many people. The more we see it, the more we tend to believe it. But after that dip in the property market, there will be a great opportunity for the market to really start to soar as rents go up and yields go up as a result. Not necessarily good for the renters, but very good from a landlord's perspective. Me, I'd be going as much as I could into the property market. I'd be buying properties when other people are selling. There could be some really good discounted properties at that particular stage, essentially buying on the fear. As what they say in the media and across many other investors, you always want to buy the story and sell the facts. So if you're buying into a market where there's a lot of fear, there could be some really good discounts out there for you as a property investor. Once the facts really start to hit home that, hey, the market's not going to collapse and rents per week are starting to increase, that's going to drive people more into the property market, essentially fueling inflation. And therefore, interest rates have to come down and the cycle repeats itself, exactly what happened in the late 80s all the way through to the 90s, and then preceding that was the dot-com boom. So while abolishment of negative gearing, it's on every single headline at the moment, it's on the tip of every property investor's tongue, especially leading up to an election coming up very soon, we need to not really look into the fear side of things and understand, well, if it happens, what are the opportunities available to me? And if it doesn't, there could be still opportunities. I know that when during the land tax changes that Queensland were trying to push through with a lot of other states, essentially taxing people's land on properties that weren't even in Queensland, there was a bit of a pullback. There was a bit of a dip in the Queensland market. And I saw some really good investors go into the market at that time, buy some really good quality properties. And we all know what Queensland's done in the last 3 years. So if the fear keeps coming into the media with more abolishment news about negative gearing, I would look at the positive side of the news articles, have a look at those areas which may be reliant on negative gearing fueling investment in that particular sector, and maybe look to buy into that market, because there could be an opportunity there, again, buying when other people are not, where you can make some really good money on the other side. So abolishing of negative gearing, do I think it's going to happen? No. Do I think it's a great story to get some clicks? Absolutely. If it was to happen, I look at it as a great opportunity to make money and get into the market when other people are trying to get out, because long term, the way economics work is it always will find its equilibrium. And that's one of the important things that you need to remember. Principles of economics is always trying to find its equilibrium, its break-even point, essentially where supply meets demand. And if more people are coming in, there's always going to be more demand for rentals. Government needs a little bit of money, and they do see abolishment of negative gearing as a great way to do it. But you're going to be hurting the very small amount of landlords out there, and it's going to be impacting the larger amount of renters out there. So they've got to weigh up that cost versus benefit analysis. Do we impact the very small few to help many? I don't think it's going to happen. I think the many are going to be hurt and the very small few will continue to prosper. I'm Jeremy Iannuzzelli, and this is what schools should have taught you. Don't forget, make sure you comment in the below section. I'm going to try my very best to interact with you all. And we're going to be doing some shows where I'm going to answer your questions from the comment section. So continue to tune in and maybe your question's going to be answered next.